Which Forex pairs are easiest to forecast? While there is no definitive answer to the question of which Forex pairs are the easiest to forecast, certain pairs tend to be less volatile and more predictable due to various factors. However, it's important to remember that the Forex market is dynamic and subject to constant fluctuations, making accurate predictions challenging even for experienced traders. By the way, if you're looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. One of the factors that can influence the predictability of a Forex pair is the economic fundamentals of the countries involved. Pairs with economies that are closely intertwined and have similar economic cycles tend to be more predictable. For example, the EU/USD pair, involving two of the world's largest economies, can be relatively easier to forecast due to the interconnectedness of their economies. Political stability is another factor that can affect the predictability of a Forex pair. Countries with stable political environments and predictable government policies are generally less volatile and easier to predict. Conversely, pairs involving countries with political instability or uncertainty can be more difficult to forecast. Market liquidity is also a crucial factor. Highly liquid pairs, such as the major currency pairs, EUR/USD, GBUSD, USGPY, etc., often have more predictable price movements due to the large number of buyers and sellers. These pairs are less likely to experience sudden and unpredictable price swings. Another factor to consider is the trading range of a pair. Pairs that tend to trade within a relatively narrow range can be easier to forecast as they are less susceptible to sudden and unpredictable price movements. However, it's important to remember that even the most predictable pairs can experience periods of volatility. While these factors can provide some insight into the relative predictability of different Forex pairs, it's essential to remember that there is no guaranteed method for predicting future price movements. The Forex market is influenced by a wide range of factors, including economic indicators, geopolitical events, and market sentiment. Even the most experienced traders can face challenges in accurately predicting Forex prices. It's important to approach trading with a realistic mindset and be prepared for both gains and losses. By conducting thorough research, developing a solid trading plan, and managing your risk effectively, you can increase your chances of success in the Forex market.